Hi, this is Kerry Artek with Wicked Stocks, bringing you the Daily SPY Report for Wednesday, November 17th, 2021. Before I jump into the charts, as usual, want to encourage you to please click like and subscribe. Subscribing to the YouTube Wicked Stocks channel will provide you notifications each and every time the Daily SPY Report has been uploaded for your viewing. It typically gets uploaded by 5 or 6 p.m. Central Standard Time, Chicago, each and every trading day for the next trading day. I also wanted to mention very briefly, the Wicked Stocks has two levels of membership, basic and premium. Basic provides you stock picks, at least one, most of the time twice a week. ETF analysis. The premium gives you an extra 2 stock picks a week, typically at least one. And so if you want to see the latest video that went out today on Nutanix, and that is a stock that's actually testing meaningful support right now that can contain selling through the rest of the year into Q1, expecting appreciable gains from here, so long as we're holding above the support level that I outlined in the video. If you want to see that video, you do have to become a premium member, but I'll give you a secret. You could actually do the 7-day trial. You do have to enter your payment information, but you can bail at any time. And so, anytime through the 7-day trial, you can bail on the free trial, on the premium subscription. No harm, no foul. I suspect, though, if you continue into subscription for the premium membership, which is $25 a month, that you may wind up feeling that it benefits you to stick around longer term. But I'll let you be the judge of that. I'll probably put out some sort of an infomercial soon here on YouTube to tell you all about Wicked Stocks and what we offer and what our plans are for the future. But for right now, let's jump into the Daily SPY Report. Long-term chart I like to start with. The fact especially that we actually tested about a week and a half, 2 weeks ago, that long-term trend line rising daily, today at 475.16. We did test it in September. The market backed off nicely from that, bottomed out in early October, and we've been trading up ever since. We had a nice buy signal actually on the way up, October 14th, if you recall, a 3 to 5 week buy signal up to that trend line that we did essentially test by rallying to within 0.5% of it about a week and a half ago. So it is there. It is the SPY ceiling really through the rest of the year. And from here, the market can fall off. How far south? Well, that's anybody's guess. I do know that just being a long-term student of channel formations, that once you test a channel top, the market is drawn like a magnet in a sense to the channel bottom, and that is at 423.36. Now I'm not expecting that, but I do think what may be realistic is an intermediate channel support at 438.08 rising daily, and that I think is in reach perhaps by the end of the year. There's no clear indication of that. We would have an early indication of that if we were to close below this steeply rising channel bottom. I'll zoom in here and show you, and you're probably familiar with this structure if you've been watching these videos for the last week or two. Today at 465 3/4 to 66.03, that area can contain weekly selling pressures, and above which we should retest the 475.16 trend line over the next 3 to 5 days. If I were to define the 3 to 5 day dynamic, I would call it two-sided right now with a slight bullish emphasis just because we're closer to 465 3/4. But it's two-sided because we could trade inside that narrowing wedge all the way through next week. Perhaps, we could rally to 475.16 by Friday's close, back off to the channel bottom out there into later next week, so forth and so on. But if we were to close below 465 3/4 today, I think we've got a good sign. The market has placed a good November high, and we should then, over the next week and a half, I'm going to say by the end of next week, actually fall back to that September high area at 453.19 to 54.05. 53.19 is nothing more than the high settlement price, and 54.05 is the actual move high. Now, we can bounce nicely off of that area. And in fact, by the time we were to test it, let's say that we tested it at the end of next week, that rising channel bottom at 465 3/4 will have intersected with the long-term resistance at 475.16. And why do I bring that up? Because at that point in time, that rising channel bottom will lose its significance, and we'll be then refocusing again on that long-term trend line at 475.16. So there is a scenario where we close below 465 3/4, we fall over the following week and a half, 2 weeks, into that low 450s, 53.19 to 54.05. We bottom out there for a week, maybe longer, and we turn back up, possibly to new highs, possibly to the 475.16 long-term trend line. So there is a 2 to 3 week possibility, but I am certainly open also to violating 453.19 on the way down. I think you could position yourself for that, and there's a myriad of ways in which you could maneuver that position as you approach the low 450s. You could liquidate temporarily, lighten up perhaps, but I think, honestly, that closing below 465 and 3/4, this market could fall all the way back to that 438.08 midterm channel bottom within about 3 to 5 weeks. And by that time, we're in later December, where this thing is comfortably in the mid 440s anyway. So it's not as big of a fall as it appears right now, given the fact that that long-term channel bottom at 438.08 is rising at a steady pace. So that kind of covers the downside. Upside today, as I mentioned, the 465 and 3/4 can contain weekly selling pressures, and above which we're in constant reach today. I don't know about constant, but we can certainly continue chipping away at that 470.65 high from a week and a half ago or so. We got close to it on Tuesday. 470.48 was the high, and then we backed off a bit, but it's still there. It can contain initial buying, and if we push through 470.65, that high from a week and a half ago, then 475.16 is in reach today, where once again we can top out into December, possibly through the balance of the year. This is the way the support and resistance looks for today. I showed you the 465 and 3/4 to 66.03 rising channel bottoms. That is our weekly support. You've got 470.65 on the way up. That is the move high from about a week and a half ago. We can top out there initially, and holding below 470.65 will allow tests today of that mid 460s meaningful support. But if we push or open today above 470.65, you should allow for 475.16 intraday. And that long-term trend line, once again, able to contain at least weekly, possibly buying pressures through the rest of the year. And as I said a moment ago, and spent probably too much time on that subject, below which we can fall back into the 440s, let's say, by the end of December. But if we close today above 475.16, and that would be quite a rally, but it's not unprecedented by any means. If we close today above 475.16, then we should reach 485 even by the end of next week. And you can see other targets here. We've got 495.48 within probably 2 to 3 weeks. But ultimately, as I've been saying, closing above that 475.16 long-term trend line, a 3 to 5 month objective well above the market at 522.76 and rising. That rising channel top well equipped to contain buying into later 2022. Now, I've had a few emails about 522.76. Can it really contain annual buying pressures? Well, it can contain quarterly buying pressures, certainly, and from there we can fall off. Who knows how far south, and then push on to new highs, and then retest the channel top later in the year, that sort of thing. So when I say annual highs, it can contain a series of highs through 2022. How's that? Anyway, let's take a look briefly at the other markets. Just want to keep you apprised of the fact that the Dow, or the DIA, after having settled above a meaningful channel top a few weeks ago, is still holding it. We've slipped below it a little bit. I mean, very marginally, but it is holding. And that's at that 359.89 area all week long. And unless we close below 359.38 on Friday, which is the low of the high from a couple of weeks ago, this market still looks good, as does the IWM. The IWM, it has a convergent intersecting channel formation this week at 237.63 to 37.91. That longer horizontal one is the more meaningful one. And as long as we continue placing weekly settlements at or above that area, the IWM also shows longer-term bullish tendencies, a longer-term buy signal, in fact. Higher trade expected into Q1. The triple Q is more in line with the S&P 500. In that it is showing a meaningful resistance area that it came close to testing a few weeks ago and has backed off ever since at 406.20. So, if the SPY can get above that 475.16 long-term trend line, And if the triple Q can get above 406.20, then they're all in lockstep for longer-term bullish continuation through the first quarter of next year. I have babbled a lot today. I think that's about all that needs to be said. Please click like and subscribe. I'll leave you with the support and resistance levels for today. And I think that's about it. I will leave you be. Have a great evening, and we will talk tomorrow for Thursday's Daily Spy Report.